You may have heard of the BRRRR method if you are interested in residential real estate investing. The acronym stands for Buy, Rehab, Rent, Refinance, and Repeat. Like house flipping, this investment strategy concentrates on purchasing and restoring rundown properties. Instead of selling them for a one-time profit, you rent them out to generate income while building equity for your next investment. What is the BRRRR method? The BRRRR method is a real estate investment strategy that focuses on purchasing properties in need of repair. Then, they rehabilitate the properties, rent them out to cover their mortgage, refinance with a cash-out option, and use the profit to replicate the process with another property. This approach is complex and requires experience, knowledge, and finesse. It is unsuitable for novices. The key to earning a profit with the BRRRR method is to purchase a property at a discount price. Most investors would say that all of your profits will come from purchases. Renovating, renting, refinancing, and even selling a property are all beneficial, but buying is where the money is made. You are doing exceptionally well if you can acquire a property on favorable terms or for less than its market value. Each step of the BRRRR method. Buy. Investors employing this strategy should not purchase just any property. It is essential to focus on real estate that requires repairs, but will also be a sound investment. In other words, it must be a good bargain. Do your homework and determine precisely how much work a property requires. Create a schedule detailing when renovations will be completed and when you can begin renting the property. You should thoroughly comprehend what you are agreeing to. Rehab. Determine your approach to the property's renovation. Will you perform the task yourself, or will you employ professionals? Determine the most efficient means of making your property habitable and appealing to tenants. For BRRRRs in particular, you must clearly understand the scope of work required for the rehab. You want to know the cost and time needed to complete the project. You must thoroughly grasp these two aspects to avoid losing money very quickly. Consider your budget as you plan. Investors should prioritize property improvements with the greatest return on investment. This typically entails renovating kitchens and restrooms as necessary and removing potential perils. Rent. As soon as the renovation is complete and the property is livable, rent it out. The goal is to determine a monthly price that will at least cover your mortgage payment. You must also decide whether to manage the rental property or hire a property manager. The sooner you rent out your property, the sooner you will receive passive income. Refinance. Once you have a reliable tenant in place, you must play the waiting game as you establish equity in the property. Because the next phase is refinancing, and BRRRR focuses on cash-out refinancing. A cash-out refinance allows you to withdraw cash from your home's equity. Various lenders will have different eligibility requirements regarding the time you must have owned the property or the amount of equity you must have accumulated. Repeat. This final phase is what makes BRRRR so alluring and potentially profitable. You invest the proceeds from your refinance in a new property and begin the process all over again. Theoretically, investors can continue to make money on each new property by repeating the procedure. A quick reminder, if you've enjoyed the video so far, consider subscribing as we frequently upload informative and educational videos. Let's continue. Who is the BRRRR method best for? No investment is risk-free. A miscalculation of price or budget, or the inability to secure a tenant at the appropriate time and price, can result in significant financial losses. The BRRRR method is not for everyone. Those with firm real estate knowledge and experience who can accurately estimate market values, renovation costs, and other factors should use it. Additionally, a BRRRR investor must have sufficient time to devote to the process. Searching for properties, renovating them, and operating as a landlord, possibly for multiple units, is time-intensive. BRRRR pros and cons. This method of investment has many pros, but there are also some cons. Pros. You can earn passive income. Investors can construct a system that enables them to generate passive income, either as an additional revenue stream or to survive off of. You create equity. Your equity will continue to rise if you acquire and maintain multiple properties. It can be repeated. Unlike flipping a house, the BRRRR method can be repeated indefinitely, allowing you to build wealth exponentially over time. Cons. Rehabs can be costly and time-consuming. Quality renovations are typically neither inexpensive nor fast. Supervising the labor can be taxing, and depending on the extent of the required restorations, you may need a rehab loan. These loans typically carry higher rates of interest and can be expensive. Profitability requires time. The BRRRR method does not provide quick income. You must invest effort and time before earning money. Being a landlord is labor-intensive. Finding and managing tenants can be challenging, and the more you repeat the process, the greater your number of tenants will be. There is financial risk. The BRRRR method contains numerous educated estimates. Whether you incorrectly estimate a home's post-renovation value, exaggerate the rent you can charge, or underestimate the renovation budget, you always risk losing money. Before deciding to do the BRRRR method, conduct extensive research and speak with others who have done so. If possible, find a mentor. The method can be very profitable, but you must know what you're doing. Inexperienced investors may find themselves over their heads. If you enjoyed watching this video, please like and share the video with anyone else you think could benefit from this content. Don't forget to hit that red subscribe button so you don't miss any of our upcoming exciting topics. Till then, goodbye and see you in the next video.